So y'all love that video that I did when I list 10 companies and funds that were $100 or less. It's right here. Go check it out if you didn't watch it. But y'all was like, Shalise, okay, girl, we need $50 or under because we on budgets. So I was like, okay, I got you guys. So today I'm going to share with you 5 stocks and funds that are all under $50. Okay, so grab y'all notepad. You're not going to want to miss this video. Stay tuned because we're about to get into this. Hey everyone, my name is Shalise, also known as Mommy Trader here on YouTube. Hey investie besties, welcome back to the channel. If you are new around here, welcome. And if you are a returning subscriber, thank y'all so much for coming back. I do appreciate you guys being here. Your girl's not a financial advisor, okay? I'm just putting it out there because I like to be straight with y'all. But I do share receipts, okay? I have many videos that I share where I do share our real numbers, screenshots of our investment accounts. I actually just did a week of updates last week. So if you want to see our portfolio update, dividend update where I do share the actual accounts, check out those videos. But I love talking about investing, wealth building, just everything we can do to really like level up when it comes to our finances and change the face of wealth and close this wealth gap. Okay, so today, as you saw in the intro, we're going to be talking about 5 companies and funds total that are $50 or under, because like you guys said, some of y'all on budgets, and I get it. Okay, when I first started investing, we started heavily investing around 32. We started our journey at 30 with putting like $100 in a 401k and all of that, but we were really focused on trying to pay the debt off. But once we became debt free around 32, we started putting as much money into the stock market as possible. But I get it, if you're trying to pay off your debt too, so you only have a little bit to put towards the stock market while you're trying to tackle your high interest debt. And like I said, I understand because I've been there. So I got you guys. Y'all know when y'all ask me for video topics, I'm on it, okay? So I have my notes down here. Let's get right into this. So the first stock, in no particular order, okay? No particular order, we're going to talk about Energy Transfer. So we have 50 shares of this company. This is rather new for us. When I say new, we bought it this month. Well, when you guys see this, this is being filmed in October. But we started out with 50 shares. I like Energy Transfer because, again, energy and financials was something that my husband and I wanted to kind of add more to our portfolio. We're big in the tech sector. We like communications. We like consumer staples, but we wanted to get, some sectors that probably do well in downturns. And we also want to get some healthcare as well. But more healthcare. We have some healthcare, but just like more energy, more financials, more healthcare. So Energy Transfer is really, really great because they really focus on processing and transporting gas and the pipelines and the stuff you hear on the news with politicians always talking about. This is a company that really is under the radar. It's not as sexy as, the Exxon Mobils of the world, but there are tons and tons of other energy-based companies that still are profitable, that are very, very well ran, that pay a dividend, and, that are just overall decent companies. And I like this because the past year, it's up like 22%, which is pretty decent considering year to date. The whole stock market, the NASDAQ, the Dow Jones, the S&P 500, everything is down. Crypto, throw that in there too. It's all down. So the fact that, with a year, tracking this over a year is actually up. They pay a dividend. And like I said, we have 50 shares of this, and I would like to get our short-term goal to 75 and then 100. And I like that it's reasonably priced. Again, not financial advice, but really, really great company, really easy to get your first share. And I think you guys would really, really like it. Like I said, we have 50 shares of this. Next is Iron Mountain. So the cloud and information storage and all of that type of stuff. Well, there are companies like Microsoft who use Iron Mountain to store like a lot of their information and hard drives and things. And I really, really like companies like this. And I think all of these companies that I'm going to talk to you guys about today are kind of like under the radar, which I think is a perk because a lot of these like popular companies like Tesla are extremely volatile. So they're on the radar of like people who like to either day trade a lot or, short the stock market. And if you're a new investor and you just want something that, again, it can just grow slowly over time versus just go jump up a lot and then jump down a lot in share value and price, then I think you guys would like Iron Mountain. It's in the tech sector because it is a tech company, but again, it's like under the radar because it stores information versus like creates a service or a product like, phones or something like that, like Apple does. This focuses more on creating storage, which I think is pretty cool. Next is Unilever or Unilever. I think it's Unilever. Somebody can correct me down in the comments, but let me tell y'all this. One reason why I like this company a lot is because they make Breyers ice cream. So my husband is a self-proclaimed ice cream snob, okay? There is only 2 brands he likes. It's Breyers and it's Haagen-Dazs. Well, I don't know if you guys check the price of Haagen-Dazs just for the little pint. It's like $5. But Breyers sometimes is on sale at our local grocery store, like 2 for $5, 2 for $6, 2 for $7. And so I can get that now. Just side note, just a quick rant. The Breyers are not half gallons anymore. Like the true half gallons ice creams are not half gallons anymore. They're like a smidget under. So I almost feel like they're trying to cheat us a little bit, but the price keep going up. But again, we're going to still buy it. But at the end of the day, they make Breyers. They also make Dove. So Dove is one of those brands that I don't want to say I'm a snob on, but I like good soap. I mean, I have a son who plays football now. I have another son who's extremely active. I have a daughter who's in 1,000 activities at school. Having a good soap is very, very important to me. And Dove, to me, is a good soap. So again, I use a lot of their products already. They also make one of my favorite condiments ever, and that's Hellman mayonnaise. Now, maybe I'm not a brand snob, but there's certain things that I will buy only. Tide is one of those things. Charmin toilet paper is another one of those things. Bounty paper towels is another one of those things. Hellman's and Miracle Whip too, depending on what dish it is. That is what I buy. I know some people are sticklers about the types of butter that they buy, the types of water, juices, things like that. And so again, because Unilever makes these products that I really enjoy using, I'm going to continue to, why not buy the company, right? And they also make Vaseline products, and you'll see like a screenshot of everything that they make, but is reasonably priced. Unilever pays a dividend, and they've been around for many, 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 many years. So again, these are just companies that I just wanted to bring to your attention that are really solid companies, and you have a lot of these products sitting up in your house and you probably don't even know it. So the next company on this list is Pfizer. So I've talked about Pfizer before on this channel a couple months ago, but Pfizer is really good because and I hope you guys can see me correctly. I had to adjust my camera, but Pfizer is good because they deal heavily in like the biopharma industry. A lot of the vaccines, the medications, they were really big with the Rona, for lack of a better word. I don't want to get this video demonetized, but they're really, really big in vaccines. And there's a lot of ailments out there, a lot of diseases, a lot of studies and clinical trials. I know because my husband works in that field, that are very, very important and that aid a lot into the medicines that we take or the different treatments that are offered. And so I think having a healthcare stock or even a ETF in your portfolio is a good option. Again, I'm not a financial advisor, but healthcare is one of those sectors that, I mean, let's just be honest, is going to always be around. You're always going to have people that need to get well or that are always sick. And so I always tell people, have a little bit of healthcare, and Pfizer is one of those great companies that are just, again, it's not like out there bam in your face, but under the radar, really good, really solid, pays a dividend, has great management, and not as volatile, as some of the other companies and funds that are out there. And then finally, I wanted to leave you guys with a fund. So funds are really, really big for me because, again, I believe you should have at least a fund in each of your portfolios because you want something that will keep your overall portfolio kind of leveled out because the stock market can be so volatile. So you'll see it up on your screen. I'm looking down because I have my notes right here. And this is, I'm looking down the SPDR Portfolio S&P 500 High Dividend ETF. So I love that it pays a dividend, but I also love that it's a fund as well. It has over 80 different companies inside of it. As you guys can see, I'm looking down over the past, 5 years, it's up what, 5-6%, considering we're in a bear market right now. And I love that inside of this fund, the makeup is mostly financial. So again, like you just heard me say, we have some energy, we have some healthcare, and now we have some financial. So I just introduced to you 5 different entities that can help you be diversified and that are under the radar. And like I said, this has mostly financials, utilities, and real estate. I'm trying not to be so heavy in tech, because right now tech is taking a huge beating, but I do love technology, but I don't want so much of it in our portfolio. Let me come down so you can see, like in this fund, Cardinal Health is in this fund, Principal Financial, ExxonMobil, Chevron. How many of you guys drove past those gas stations this week? I love that the 30-day yield is 4.61%. So anything between like 2 and 5 is always the sweet spot. And the expense ratio is 0.07%. Keep in mind, every index fund, every mutual fund, every ETF, which are exchange traded funds, all cost to get into them. These are called expense ratio. So you want something super, super low, and 0.07% is low. So you guys can see all of the prices of everything that I talked about today. Well, the current price of the shares, because they change so much. I was going to say the actual shares, but by the time I screenshot the actual stock and then embed it into the video, because the stock market is open, it'll change. So you guys can see it up on your screen. But again, I wanted to present you guys with, I think, some pretty good options if you don't have a whole lot of money to invest. $50, right? $50 or under. All of these assets are at the recording of this video, because like I said, the stock can change. It can go up or it could go down. So thank you guys so much. Make sure you like, subscribe, share, follow me over on Instagram. And until next time, I'll see you on the next one. Bye-bye.